Hi everyone, this is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. If this is your first time attending TradeFinder, welcome. For those of you that have been with us before, welcome to you, and all of those of you that are live streaming on YouTube. I'll give you a quick rundown of how TradeFinder works. We do this every Tuesday night, but before we get to the good stuff, if you've watched any of our recordings, you're familiar with this. If not, this is a disclosure/disclaimer that we are required to show you. So if it is by chance the first time you're seeing it, please take a screenshot of it, read it in detail at your leisure. A couple things that the powers that be want us to make you aware of is, number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. The rest of it, again, please take a screenshot of it, read it in detail when you get a chance. The way TradeFinder works is we'll talk about the market, and we'll actually add in a few other markets that some of our viewers have asked us over the weeks. And then we'll talk about some trade alerts. I'm actually going to show you the screenshot of our trade alert screen, so you'll see exactly what our alert subscribers see. Then we'll go through a review of our recent case study considerations through TradeFinder. We'll look for a case study consideration for tonight, and then with whatever time we have left at the end, we'll open it up for a general Q&A. Usually that amounts to you guys giving us your favorite stock symbol, and we take a look at what our indicators may be showing about the future movement of that stock. That's it. That's how TradeFinder works. We do have a Q&A window open. So if you have a question as we go through, please put it in there. I won't take the questions until the very end because it distracts me. So, but we'll catch as many of those questions as we can at the very end. Please understand that if you ask a question and it's not answered, it's not that it wasn't a good question. It's just we have a time constraint. So it's possible that your question doesn't get answered. If not, I hope that you'll come back for a future TradeFinder and we'll catch you then. All right, with that said, let's go ahead and take a look at the market and see we did bounce back today and hit the 10-day moving average on the high and then closed below the 10-day moving average. So it's important to note that we have not closed back above the 10-day moving average. And at this point, this downward zigzag that we featured in our last SPY update on YouTube is still intact, which shows a C wave extension down to the 100% level, which is right around 420. Note that where we're finding some support is at the 61.8% extension. That makes a lot of sense because the 61.8% fib level is an important fib level. So we've come down here. That actually coincides with this low that occurred back in September, and along the lines of a little bit of support going back to the break below the 10-day moving average to test the 50-day moving average back in July. So all that makes for a bit of a potential support area. Again, if the C wave extends the way it should with a 61.8% B wave correction, should work our way down to that 100% extension. That's when it starts to get interesting because you can see that there's a lot of support at 420. You may remember it's posted on YouTube with a lot of our SPY updates going back when the market was moving to the higher, that 420 was a level to the upside. That was our target that was reached back on April 29th. And we just kind of hit that level numerous times, hit it, bounced down, hit it. So it was significant resistance. Then we broke through it in early June. So on the way back down, that's likely going to act as an area of support. So will that hold? Will that be the end of it? Or will we have a 161.8% extension to the downside coming down here towards the 400 level? I extended a little bit lower. And the reason that I did that is you can see there's a gap right there that hasn't been filled yet. That was between April 1st and the 5th of April. So there was a little bit of a gap up there that hasn't been filled. It's hard for me to believe that we come down to 404 without going down and fill that gap at 400, but that's ahead of the game. First of all, we're looking for the C wave extension down to the 420 level. Note these big intraday bars. So lots of volatility moving back into the market, which has made it fun. As an options trader, that's what you want. You want this volatility, all these little tiny bars, even though it was moving to the upside. That's not what you want. You want some volatility. You want some movement in the markets. And so we've enjoyed that. So let's take a look at a few of the other markets. I'll start off with the Qs. We take a look at a chart price of the triple Qs, and you can see that bounced up there and haven't actually made it back to the 10-day moving average on the Qs. It's interesting that there's some differences in these major markets. Now notice if we go back and look at the SPY, we had a wave 5 that ended, and now we're in a correction mode following that. But when you look at the Qs, we're actually in a wave 3, and this is a wave 4 correction. So we're only at the 43% level, which is a little bit below 38, but not down to 50 or 61.8. And it would make sense that the Qs come down here to this area of support right around 340. If we come down there, you could see a wave 4 around 61.8, which may mean that if we hit that level of 420 on the SPY, that might be it. That might be the end of the correction, but we'll see what happens once we reach there. Everybody asks about the IWM, and I've been talking numerous times that until we break support at 210 or until we break resistance at 230, the IWM is just churning in a range, and it still is. There's that support level at 210 that I was talking about. Here's the resistance at 230, and we're just trading right between there. Now we do have, and we have before, a triangle here, but before, when we broke out of the triangle, we weren't able to break, and here it is right back here. We weren't able to break below 210 or above 230. We tried both of them. So we broke down initially, then retraced it, moved to the upside, but we weren't able to break either one of those levels. It's almost like they're etched in stone at this point in time, that the IWM is destined to trade between 210 and 230. Well, when you start saying that, that likely means that at some point we're getting ready to break one of those levels. Note that nice doji on the chart today. That's a pretty solid doji. We opened at 220.96, closed at 221.02. That's almost a perfect doji, meaning that the opening price and the closing price were exactly the same, with the intraday movement from the low to the high throughout the trading day. So are we going to break out of this triangle and finally break support or resistance? That would be nice, but so far we're stuck in this trading range. So not a whole lot to say on the IWM. Looking at Bitcoin, I know everybody always wants to look at Bitcoin and look at that move to the upside. And this is exactly what we had talked about with this zigzag pattern, the downward zigzag pattern completed right there at 40,000, which also was a lot of support. Again, go back if you're streaming on YouTube, you can look at our channel and pardon me, look at the SPY updates that we've done, and you can see how well Elliott Wave has been forecasting Bitcoin. It's been so spot on, almost incredible how close it's been. Well, at this point in time, we might be just a touch overbought, as you can see where we are here. Pardon me, and the separation with the 10-day moving average also hitting a little bit of a resistance area right here at 52,000. Hard for me to imagine that we break above that with the fact that we have separation from where we're currently trading and the 10-day moving average. Looks like we might need some consolidation here first, but we had talked about this before, that if we break 52, then we're likely going back to those all-time highs on Bitcoin. So really nice movement to the upside there. And after the consolidation at the C wave extension there at 40,000, starting a new impulse move to the upside. So the question becomes, where does the B wave correction start? Is it going to be right here? It would be logical with the resistance and the fact that we're overbought. So we could, this is just all speculation right here until we start to see that B wave actually come into B. Because until that happens, this A wave extension could go higher. That would surprise me, considering the fact that we are overbought. So I would expect that we would have some sort of a correction, but it's going to do what it's going to do. And then once the chart's label, we'll have a better idea of where that C wave extension could go. But note that we are in a new impulse move to the upside on Bitcoin. A lot of people have been suggesting, how in the world, if you're thinking of risk on, risk off, can we be in a downward zigzag in the market itself, but yet an upward impulse in Bitcoin? Well, that might defy common sense, but the market does that a lot. The market defies common sense often, and that's what it's doing right now. It's showing that if you view Bitcoin or the cryptos as a risk-on trade, really moving against the grain as far as what the market's doing itself. So we'll see how that continues out. And then we've been looking at the Nifty, which is the India market. I've been talking about how that seems to be one of the better charts, and we're holding in there at an important level of 49. So that's really very important that we hang in here and hold that if we're expecting the Nifty to go to the upside. And so far it has. Yesterday we broke back below the 10-day moving average, but back to the upside today. So you can see we're in a little mini trading range right here, right between 49 and 50. So certainly not what the IWM is going through, but the fact that support has held so far leads you to believe that maybe we're going to break to a new wave 3 high. I've noted that there is some separation between the 10-day and the 50-day moving average, which makes you a little cautious. When they separate too far apart, they tend to come back together. But unless we break below 49, you have to stay bullish on the Nifty. And if we break above 50, then you become even more bullish. So those are your levels there. You break below 49, you become a little more bearish. Break above 50, you stay bullish, and maybe even add to current bullish positions. If you had a bullish position right now in the Nifty, there's no sign or any reason to close that out. You would only do that if you broke below 49. And then the XJO, which is Australia, again, for our international viewers, we are breaking to the downside. Look at this, though. You're going to see something happen out of the ASX very soon. Look at this triangle, a well-formed symmetrical triangle following this move to the downside. So if we take a look at this first zigzag pattern that occurred here on the, right at the 61.8% level, and we extended right down to 161.8. What better spot could you have to go into a consolidating triangle than an extension right at the 161.8% fib level? If you're streaming on YouTube and maybe you're not a big Elliott Wave person, or you're fairly new to the world of Elliott Wave, look at these levels. I mean, how can you not respect what levels Elliott Wave and these Fibonacci ratios give you when time after time after time, they're so spot on? You're talking about the India market with the Nifty, Bitcoin, completely different markets, the SPY and the XJO. It doesn't matter what market you're talking about. All of these levels work. And it's just amazing to see these movements here with what's occurred in these zigzag patterns following corrective moves in these wave 5 impulses. It all works and it all makes sense, and everything is pretty much spot on right now. So if you're newer to this world, I encourage you to embrace it, gain more education. We have a ton of education on Elliott Wave on our website, EWOtrader.com. We really pride ourselves in being much more than an alert service. We want to educate. That's primarily why we're here, is to educate traders on Elliott Wave, because we're such believers in it as an indicator that actually helps predict where things are going to go. So many technical indicators are lagging, meaning that they follow the market or they give you signals based on what's already occurred. There's very few signals out there, very few indicators that give you an idea of where things are likely to go. Elliott Wave is one of those. That's why we exist at Elliott Wave Options. So we'll see which way we break out of this triangle. We could turn and go back to the upside, or we could move down towards the 261.8% extension to the downside. Either one of those is possible. Right now, there's no clear signal. So if you're trading the Aussie market, you're kind of in a, all right, show me what you're going to do here in the Missouri state, if you will. Show me. what's going to happen from here. But right now, everything makes sense as far as where the consolidation lies. So we'll see where the breakout occurs. So that gives you a rundown of what's occurring in the other markets. I thought I would throw a couple things in. Interest rates have been really important. So let's go ahead and take a look at the TNX. We've been talking about interest rates and the dollar, especially in our last couple of SPY updates. And you can see this vertical break out of interest rates. Interesting that interest rates moved up today and the market moved up today. Prior to that, with these moves to the upside in interest rates, the market moved to the downside. So why did we have a breakout to the upside in interest rates and a market up today? Those two things don't normally correlate. So when we have these kind of things, I've talked about this in the past, when things really don't jive, if you will, with what the normal correlations are of the market, they tend to work themselves out. And I think this will also. And it just depends on whether or not interest rates continue to the upside. We're at a 70% wave 4 here. And according to Elliott himself, that would disqualify this wave 5 to the downside. Super technically, you would want to see that wave 4 hit 78.6. When it hits that fib level, then you know for sure that this downward zigzag is out of play. But Elliott would be saying, hey, you hit 70%. There's a high correlation or a high percentage of time when you hit a 70% corrective level that you're going to go to 78.6. So if Elliott was here with us, he'd be saying, yeah, that downward zigzag's over with, forget it. So we'll see how that continues back to the upside, but it's going to be difficult, especially for the tech sector, if interest rates continue to move to the upside. It'd be very hard to imagine those moving higher. We did actually talk about gold a bit, so I thought I would bring in gold because we'd mentioned gold had caught a bid, but could it hold? And the answer is no, and it doesn't make sense that it would either, with interest rates going higher, with the dollar to the upside. We did have a little bit of a bounce up, but we only bounced right to resistance. And until we can break above 165, and if you wanted to get really technical on whether or not gold can have a bullish run, it's got to break 170. So even breaking above 165 is not that big a deal. It's got to break above 170. And note this wave 4 is right at the 161.8% corrective level. That's as strong as it gets. So gold has a lot of work to do. If gold's going to try to break out of this and move to the upside, it's going to have to show something. It's going to have to show a really strong move. I just don't see it. I don't see that coming. I think we're testing this 165 level. And if interest rates don't tank back to the downside, very likely that gold is going to fall down and probably come down to this wave 5 target. That's what this wave 5 labeling here is called the tap box time and price projection. That's where it's projected to go down to. So I would expect to see that occur. And by the way, if you're curious about this software program, it's called Profit Source. It's created by the Hub organization, HUBB, out of Australia. To me, it's the best Elliott Wave software that exists on the market. I've tried all of them that I know exist. There may be some that exist that I haven't tried, but it's programmed exactly to the mathematical algorithm that Ralph Nelson Elliott himself wrote. So it's nobody's personal adaptation. It's no customization to it. It's exactly what he wrote over 100 years ago. So we'll see how this breaks on gold, but just thought I would update that since we kind of said, hey, gold had caught a little bit of a bid. Can it hold? Just doesn't look like it at this point in time. So that pretty much covers the markets. Well, normally when we do TradeFinder, we highlight one of the alerts that we may have closed out in the current week for our Trade Alert subscribers. And we do have an alert service, again, EWOtrader.com. But here I thought I would just show you what our alert page looks like. This is our trade page where all of our trades are listed. And you can see here that we've been in the energy sector. That's been bullish. Money has been moving in. I'll show you a chart of the XLE and we can take a look at that. But look, we had a closeout trade on USO that we exited today. And that was a nice 56% return in 4 days. We had two different trades on natural gas. So USO is oil, UNG are natural gas. And we made 55% in 3 days on one of the trades. 40.5% in one day on the second trade. And so now here we are with 56% in 4 days on oil. So we've had 3 trades in a row, all less than a week long, all with really nice returns. And you can see that there's all this detail that's put in. And if I click on one of these alerts, here are the details that occur for our alert subscribers. Not only do you get the exact strikes, prices at the current moment, but you get a chart as well as far as where things are expected to go. And you can see the target price originally on the wave 5 was at 22.58. Well, why did we exit before we hit there? Well, the reason is we got a bit overbought, and you can see that we gapped up. We had separation between the 10-day moving average. And so we closed this trade out, waited for the correction because we were overbought, which occurred, and then we got in again. And that's exactly the way we like to do things at Elliott Wave Options is we watch for overbought, oversold conditions, not necessarily here for the original target price, because why hold a position that's going to pull back and forfeit gain where you had nice gains in a very short period of time? Take those gains, look for another entry to get back in, and that's what we've been doing. But the energy sector has been really bullish, even in the time where the market itself has not been so bullish. So I thought I would share those things with you. And you know, our last SPY video is generating quite a number of views. I think it's kind of a shame that more people look when things are going down than to the upside. Maybe it's everybody thinks that, oh, when things are going to the upside, it's an easy trade. It is easier when the market's going to the upside, that's for sure. But if you're kind of confused on where the market can go from here, what a better time to become one of our Elliott Wave Option Alert subscribers, as you can see how well Elliott Wave has forecast these moves in all these different markets. It doesn't matter which of the markets that we're looking at. So the XLE, which is basically the ETF for the energy sector, and you would think, yeah, that's probably doing pretty well. We've been in oil, we've been in natural gas, obviously main components within the XLE. We'll note where we are now, though, in that XLE is that we're at a point of potential resistance or pretty close to it. We could go a little bit higher, but we're pretty close. And you can see why we went ahead and took that oil trade off today, because we're just overbought. Look at this situation with the XLE and the 10-day moving average. That's overbought. You wouldn't want to get in now. At least I wouldn't. I can give you individual investment advice. Obviously, you trade your own account, but that's an overbought scenario where we're nearing resistance. That's usually difficult to get through without some sort of consolidation, whether it's just a sideways consolidation, a pullback towards the 10-day moving average, whichever of those two play out. But one of those two will happen, because that is a rule that we talk to our subscribers about. It's a market rule. No security in any time frame gets very far away from its 10-day moving average. It just doesn't happen. So either you consolidate here sideways and allow that 10-day moving average to catch up, or the market itself comes back down towards that 10-day moving average. One of those two things happens every single time. So I don't know which one of those is going to play out. So this is kind of like, all right, well, we had a nice run. We had made 3 nice trades in less than a week, all profitable. Let's let the market tell us where we go from here. Now, clearly, if we break above this resistance level from back in June, then we'll look to go long again. And I think that's probably what's going to happen. I don't think that oil prices are going to come down anytime soon. I don't think natural gas prices are going to. We're just in the early part of October. This is normally a seasonally bullish time of the year for oil and natural gas with winter coming up. So the cold weather, people buy more of those. You go back, it didn't work last year. So trying to be fair here, but historically, this is the time of year where the energy stocks tend to move to the upside, because we're moving into the cooler months and people use heating oil and natural gas for heat, et cetera, different types of commodities for energy stocks for moving to the upside or for heating them, their homes, et cetera. But we need to clear above this 56 level with a follow through day. We'll watch it and see and look for more entries. Perhaps we move back to the downside. You can clearly see where support is here. I just don't think we're coming back down here. I really don't. I really don't think we're actually going to come back down towards the 10-day moving average. I would suspect that the correction with where we are now is going to look more like this right here, where we go sideways for a while and build up some momentum, let the energy build back up, if you will, pun intended, on the XLE, and see if we can break above that resistance level and move higher. All right, so I wanted to share that with you because of the trades that we've put on. Now let's take a look at some past case study considerations. We've closed down most of them. We'll look at least one every single week. We have an old one here. This is on POLY, and I think this is about to set up for a good short position here. It's the way it looks, especially if the Qs turn back down from that 10-day moving average. You can see that we had a downside breakout. We moved back to the upside. We came back down. We're sitting here at the last bastion of support here on POLY. And if that breaks, we're a little below the 10-day moving average. So kind of went sideways today. But if that breaks, it's very likely that POLY, Plantronics, comes all the way back down here and below 15. So that's a pretty nice trade to the downside. So we're going to look to see if that occurs. Then Align Technology is one that we looked at back on August 24th. And at that point in time, we didn't have interest rates moving to the upside. So technology was a good place to move higher. Well, since then, with interest rates moving to the upside, you can see that we created the wave 4. And that's the issue with the wave 3, right? When does the wave 4 start? And if you're wondering about trading the wave 3, we're big believers in trading it at Elliott Wave Options. And where does the wave 4 start? You can look at our education section, and we talk an awful lot about this with having zigzag patterns within the wave 3, etc. And you can see right here, we're at the 38.2% fib corrective level, which is coinciding with some support. So we did find a little bit of support, but we're oversold to the downside here. So do we bounce back up and move up to that wave 5, or do we move lower and create a lower wave 4 at perhaps a 50% correction or 61.8? Well, we'll know more pretty soon with how Align handles this 640 level. Now, we looked at Camping World. This is one to me that has really just defied the market. To me, from a common sense standpoint, when the market begins to weaken and you have oil going up, you have inflation going up. We've listed all the different inflation indicators, even the PCE and the last SPY update, which is the Federal Reserve's favorite indicator to look at for inflation. They're all showing inflation. It hasn't been transitory yet. Even the Federal Reserve admits that it's been a little higher and lasted a little longer than what they expected. So you would think these luxury items like campers, etc., it would have had a much rougher time in the market, but it hasn't. It's just been going to the side, going sideways, and we have a strangle on it already, and we've got another symmetrical triangle. So something's going to happen with this stock. It's going to break one direction or the other. I'm just shocked that it hasn't broken to the downside yet, but that's why you put a strangle on, because sometimes the market does things that don't make sense. BOTZ, this is one that we looked at, and another technology stock that had an issue with interest rates moving to the upside. It's found some support right here at the 61.8% correction. That's going to determine where this goes from here. Does it move up and hit that wave 5 target? If it breaks lower, then that disqualifies the Elliott Wave program or the pattern, and you're going to move down here and retrace the entire impulse move to the upside. So that's the trade. You're at 35. It can break higher from here and go on and hit its wave 5 target. But if it can't hold here at 35, then it's at 32. So pretty easy to figure out where things may go from here. Core Point Lodging, which was one on our momentum search. And that's on lower dollar stocks that do have good technicals behind them, not just heavy short interest. And look at that. How about that movement to the upside with the market moving lower? Pretty amazing stuff that's gone higher, but that's exactly what we expected to do. And then look at this one, Fizz. You know, we were looking here, and this is one of the things I talked about, that even if the market begins to weaken, if the economy begins to weaken, money tends to move into what they call defensive sectors, which is alcohol, tobacco, and gambling. But beverages fall within that, because people aren't going to stop drinking their sodas. They're not going to stop drinking alcohol no matter what's going on. At least that's the viewpoint with the alcohol, tobacco, and gambling stocks. If those are vices that people are going to continue to find a way to access no matter what's going on in the world. And you can see there's resistance here at 55. So that was the chart that we looked at, and we've continued to move to the upside. Pretty amazing. This is just trucked on higher, even with what's occurred in the market. So doing exactly what we thought it would do, even with the market correcting, as you've seen. And then last week we looked at FND. We looked for downside trades. Last week, take a look at this. Boom, straight down on FND, move lower, and then info here, that had a pretty big down day. If we look at the 10-day moving average, it was a little bit oversold, but we looked at it, and the point was, can it hold above this level? And if it did, then it could be a short. And yesterday, it was ready to break that. Today, back up and touch the 10-day moving average on the high. So you can see this little support level here at 115. But if it can't hold that, the eventual target is back to this previous floor, because the wave 5 extension was only 95%. Our subscribers are aware of, because they've been participants in our education, that if you have a wave 5 that extends more than 100%, you only look for a 61.8% correction. But if the wave 5 extends less than 100%, then the corrective move is back to the previous 4. So that would be the target there. Probably going to hit some support also down here at 110. So if it breaks 115, maybe some support at 110 before eventually working its way down the previous 4. So all of those have worked out pretty amazingly well, considering everything that's gone on in the market. Some of them completely counter trend moves to what's happening in the market. And that's a good lesson, is that not every stock follows the market. Most stocks do follow the market, but not all of them. You can find areas that move counter to what the market's doing in this general trend. And I've talked about this numerous times, that investment companies where you're putting in money every month through dollar cost averaging programs and your IRAs and 401ks, et cetera, that money has to go to work. They can't just keep it in cash. Even if the market is correcting and they say, the market is correcting, I'd rather not put it to work, they can't. By prospectus, by securities law, they have to put a high percent, not all of it, but a high percentage of it to work. So that's where those defensive sectors like fizz, beverages, come into play. You look for those to potentially move against the grain, to the upside, if you will, even when you're in a market correction. So those things all play out. So now we'll go ahead and look and see if we can find a case study consideration for tonight's TradeFinder, and then I'll go ahead and open it up to questions. So for those of you that may be watching us on YouTube and it's your first time streaming, when we look at these each week, we go to these pre-computed scans. Now, one of the beauties of this software, Profit Source, is that if you have your favorite set of indicators, you can program those in, create a search, go back and look at markets a year, 2 years. You can go back as far as you want and do searches to see how those indicators would have worked in different markets over the years. And then you run those individual searches. Well, the pre-computed searches are those that are already done for you. Now, when you look here, you can see this tab that says Elliott Wave Options. I use this program. A lot of our Elliott Wave Options subscribers use it as well. So the folks at Hub said, hey, we've got a lot of these Elliott Wave Options people using the software. So they went ahead and created these searches in their pre-computed list. So our subscribers didn't have to go and run the searches individually and wait the time frame, 15 minutes or whatever it takes to run a search. They're just instantly there. And these ones that say EWO beside them, those are my personal ones. So those are listed there as well. That's what I look at every single day. Now you can see on the impulse side, no results today. On the corrective side, no results today. But look at the momentum scan, 8 results. That's kind of amazing. I would imagine, just a guess, and I don't pre-look at these, because I don't think that's fair. I don't do any of that kind of stuff, preset things. We look at them together because I think that's a greater educational experience. If we look at things and I talk you through what would be going through my mind when I'm looking at these, my guess would be that there's some energy stocks in there because that's the sector that's been moving higher with the market moving lower, but who knows? We'll take a look at them and see. I would like to note that on the consolidating stocks with this market move to the downside, we're down to 76. And those are the ones that we look to find our triangles where we're looking for potential breakouts of triangle patterns. And we have a volatility strategy within our portfolios of alerts, which is all triangle patterns. So we don't care which way it breaks. Doesn't matter to us whether, well, I always say that, but if you had a preference, you'd pick the downside. And you might think that, well, why? Well, we all know things move faster to the downside than they do to the upside. That's just the way the market works. So we do have a preference. Love to see things break to the downside. But then, you know, everybody makes money, or more people make money when things are moving higher. So it's kind of hard to root for things to go down because you're rooting against hardworking people that are putting money away and trying to do the right things into retirement plans, and a down market hurts them. But the fact is the market does go down at times. But we were almost at 200 of these consolidating stocks, and now we're down to 76. So the breakout has shown that a lot of stocks have broken out over that time frame. But let's go ahead. All you have to do is put a little tick the box there, and then here you go. Here are all the searches, and right up Hostess brands. Well, that's not that's not energy, is it? Look at the symbol, Twinkies. I guess people are still going to eat their Twinkies no matter what's going on in the market too. So maybe you add that into alcohol, tobacco, and gambling. But there is energy. Brazil is a short now. First Bank, that kind of makes sense because interest rates have been moving to the upside. That's good for financials. As the spread with interest rates widens, that gives the financials a chance to make some money. When interest rates are really low and the spread's compressed, it's very hard for financial stocks to make money. And that's been a difficult market for them. Remember that they borrow on the short end, lend on the long end. And so the difference in the spread is how they make money. So when interest rates go up and then the spread widens, that gives them a chance to make more money. So that one makes sense too. I'm not sure what Kiro is. This one, I don't know what that is either. But let's take a look. Here's Marathon Oil right off the bat. That one makes sense. Man, that's a pretty vertical move already. Look at that DMI though, and doesn't get much better than that. We have broken above this area of resistance right there at 14. We're at 1538, so the target's at 17. Not a whole lot of movement left to the upside, but it's not a big dollar stock. This CCI, and we do have education on all these indicators that we look at for our subscribers. It's all available on our website. We're actually finishing up tomorrow night our Indicator Mastery series, where we've gone through and talked in depth of all of our technical indicators that we use to support Elliott Wave analysis. And we had an Impulse class last week, Impulse Mastery, the first time we've presented that, where we went more in depth into the impulse patterns, zigzags, etc., within Elliott Wave. So again, if you're new, if you're streaming on YouTube, it's your first time, visit our website, look at our educational section. I think you'll be pretty impressed. We're kind of proud of the education that we put out. So let's move this down. The DMI looks great. Now, the issue that I'm concerned about with that vertical move is where's the 10-day moving average? And that's the question, right? That's the concern. You can see where we are here, and the 10-day moving average is right down here at support. So if the energy sector, which remember we looked at the XLE and that looked overbought too, that looked a little tired, perhaps oil and natural gas take a little bit of a pause. Maybe this comes back down towards this support level and intersects with the 10-day moving average. You could certainly see that playing out. It doesn't have to, though. Remember what I said, that we can consolidate sideways here and allow the 10-day moving average to catch up, but really can't go long here right now today. Just can't do it. There's too much separation between where it's trading and the 10-day moving average. Things can stay overbought or oversold, but not for very long periods of time. They just don't. they correct themselves, that will, I think there will be a better entry on Marathon Oil than we have right now. So we're going to have to pass on that one. As great as that looks, and maybe it runs up to 17 before it corrects, but I can't, from past experiences, enter a position that looks like that. It's just too overbought to start with. I would rather wait to see that consolidation. It doesn't have to come back down to 14. That would be great, though. If it came down to 14, hit that 10-day moving average, bounced up, that's ideal. Well, the market doesn't always give you ideal setups. It's nice when it does, but they don't always exist. So I think we're going to have to look for something else based on that. You just got to love Hostess's symbol is TWNK for Twinkie. And goodness, I mean, that's defied the market as well. So everybody's out there eating their Twinkies. They're still buying Twinkies even with the market. This is crazy. It gets a little comical at times, doesn't it? I mean, good. But the ADX has now hit 40. It's outside the positive directional indicator. That's another one that's showing that's an overbought signal based on the DMI. Again, with our indicator mastery series, you go through and learn about the DMI. You learn that that's telling you the strongest part of the move is over. It doesn't mean the entire move is over, but it is telling you the strongest part is over. And so to move higher from here would be difficult. Plus over here on the right-hand side, each one of these little blocks is only 50 cents. So if we were to condense that down, it's not quite as much movement as it looks like. I don't know that that's enough movement to put on an options trade anyway. So let's forget that. I have no idea what this one is. So let's take a look and see what that is. Well, look at that. The DMI is just now giving us a signal. It's just breaking above the negative directional indicator, breaking above 20. Look at that separation in the two directional indicators. I'm not really familiar with this, so I don't know what kind of options we have, but I can tell you that that's as good as the DMI looks right there. So it's suggesting that we are going to move higher here. We just broke a long resistance area at 6.5. A little bit of separation from the 10-day moving average, not a whole lot. You can see that this stock is oblivious to what's going on in the SPY and the Qs right now. So let's take a look at the options and see what perhaps we can see from here with options analysis, see if there's RJI, if there's decent option liquidity here. So type in RJI. So it says there's no options for it. So that's not going to work. So it doesn't have options. That isn't going to help us. So yeah. So all right. So forget that one. And here's another energy stock. I'm guessing this one's probably going to show, yeah, as being a bit overbought too. Look at that one just breaking resistance as well. Another solid DMI. That's a shame on that RJI one because it looks so good, but we just broke above a resistance level today. Not that much overbought here. Not a whole lot of movement left though. 35 cents you wouldn't normally think is a big day, but that was a big day for this stock. So 1078 going up to 12 is not a whole lot of movement left, but it certainly looks pretty good. Well, let's see what the options look like, if there are any. So we're finding some stocks that I'm not familiar with. So we'll see what CVE looks like. Nope, so none there, so won't worry about that one either. Let's go look at First Bank, see what that looks like. Man, there's just not a whole lot of good stuff to look at there. Went sideways for forever, and then it's finally broken to the upside. And so you can kind of get it because interest rates have been so low for so long, and it's breaking to the upside. But then when you look at the ADX, it's outside the positive directional indicator. That's usually a warning sign that maybe you need a little bit of a rest here. We are overbought with the 10-day moving average, so not too excited about that one either. So we're running out of opportunities here. ENLC, see what that one looks like. And you can see that we have some breaking above the recent wave 5 high there. 6.5. So that's nice. The DMI looks okay. Positive directional indicator moving back above it. Not a whole lot of movement out of some of these, though. These are some lower dollar stocks, but a lot of you that are into the meme stocks, etc., might like this. A doji today, though, so that's a little bit of a, what does that mean? But not really that overbought from the 10-day moving average. So it looks like a unit investment trust. So I don't know about this one either, but let's take a look and see if there's any symbols there. Was it symbol? ENLC. So ENLC, see what that looks like. Well, we have options here. So let's take a look. I'll put this viewer on for you. And they don't look terribly bad. I mean, honestly, there's October. Wouldn't want that. November's 45 days, probably looking at December. And it doesn't look that bad as far as the spreads. Might want to consider looking. Normally we like trade out of the money because the delta's in our favor. Delta and gamma are in our favor. But here, perhaps looking at in the money options might make more sense on something along these lines, but the spreads aren't that wide. So they look pretty good, especially with the fact that we don't have much room to move back to the upside. We're trading at 727. Our target price is 8. So not a whole lot of movement from here. So in the money would make a little more sense here. There's not really enough movement to allow the delta and gamma for the acceleration to work in our favor. But I'm not familiar with this stock either, but it looks pretty good. So since we don't really have anything, we've got some corrective stuff from last week. Let's go ahead and put this in here. 10.5, a little bit off the normal beaten path here, but ENLC bucking the trend a little bit to the upside. So we'll see what happens out of this one. And again, normally we're looking for out of the money around a 25-30 delta because that's where the math works in your favor the best. But there's just not enough movement, I don't think, to gain the value of the acceleration from the math standpoint. So perhaps more in the money, take any implied volatility out. The VIX is trading at 21 at the close, so a little bit elevated there. So let's take the implied volatility out of the equation so it doesn't mess with us there. And so we'll take a look and see. I mean, that'll be a good learning tool for moving into next week, if you will. All right, so we have a few minutes, so we'll take a look at some of your requests. Amazon, ask about this one a lot, and I've stayed pretty firm in my commentary here that as long as Amazon stays above 3,200, especially moving into the time of the year that we're moving into, I stay bullish on Amazon. But if it breaks 3,200, that changes everything because it goes down here in a heartbeat. So we'll be down 30, 40, so probably all the way down to 3,000 because we're going to come down and hit that round number. So if it can't hold 3,200, then it's going to go down to 3,000 in my opinion. But as long as it can hold this support that it's held for a number of months, moving into the time of the year where you think Amazon is a great stock for the holiday season coming up, Black Friday, etc. Hard to imagine it not being a good time of the year for that stock, and it could potentially bounce back to the upside. So 3,200 is the level. So I'm not wavering from that. Stays above there, still bullish. If it breaks below there, everything changes. George asks, can explain how and when to use Fibonacci retracements and extensions, starting point, etc. I could go through an entire session on that. I'll give you a brief rundown, but I would refer you to our website. We have tons of education on that. And, that always is the question, where does the impulse move start? And that's basically what it amounts to. You can see there was a doji up here where the market ended and we started to the downside. You can see that there was a pretty good impulse move. So it's just pretty simple. Where did the impulse move in? How much was the correction? And then that gives you where the target is. So these tools basically do the work. But rather than spending hours going through education on Fibonacci retracements, Fibonacci extensions, zigzags, Elliott Wave, etc., all of that information is on our website in the educational stuff, and it's set up as courses. If you really are serious about wanting to know where to draw those lines, etc., go through the education. It will really bring you up to speed and you'll be good at it, and you'll be amazed. This is a thing that I like to talk about most often, is when you learn these patterns, you'll be amazed how differently you look at charts. Because right now you can just look at a chart and see a bunch of lines. But when you start to understand the patterns, when you look at a chart, you don't just see a bunch of lines anymore. You see the patterns. They jump out of the page at you. I equate this to like the Spencer's, the Spencer's gift shops, where you would go in and you'd see a poster and it just looked like a bunch of hieroglyphics, whatever, on the poster. But when you stared at the poster long enough, you could see something emerge, like one of those tricks with your eyes, something hidden that you can't see when you first look at it. That's exactly how it works when you learn Elliott Wave, zigzags, triangles, etc. Is that when you just looked at a chart before and saw a bunch of lines, now all of a sudden you see patterns, and your eyes just look at charts differently. It's amazing. So Angel, want to pronounce your name correctly. Why is the SOX down? Well, we looked at the SMH rather than the SOX in our chart on the SPY. We said if we lost the SMH, then that was going to be negative. So the SOX is very similar. The patterns are almost identical. We had that upward trend line. It's the exact same trend line that we drew on the SMH. And I imagine your question is coming from the fact that there's a chip shortage, right? Cars, everything are waiting. There's, chips are in demand. Why would we be moving to the downside in something that has seemingly endless demand right now? It just is getting sucked in with the rest of the technology, with interest rates moving to the upside. I was reading about cars. You get $50,000 cars that are waiting on a $50 chip. Then they can't manufacture them because they don't have enough of them. All those kind of things. So I get why you're asking the question. It doesn't make sense, right? You're thinking that they should have pricing power, etc. But when interest rates go up, it just hurts everything tech. It just jumps into it. Vince is asking about HCC. Coal. And yeah, that's a big deal in Australia, isn't it? I know that I was reading about how China is in desperate need of coal and Australia has it. Nice break above that wave 3 right there. Looks like that wants to continue higher, but man, that is one heck of a vertical move right there. And it's overbought right now. So it would be hard to go long right now. What would be ideal? Again, the market doesn't always do what's ideal, but what would be ideal is if that came back, tested, which likely could happen. This one's a little more likely than some things that I say would be ideal if it did this. Come back down, test that wave 3 top, let that 10-day moving average catch up, and I don't think coal's done. I think the entire anything energy wise is a little overbought right now. I think it needs to pause, take a break. Just because I think it needs to do that doesn't mean it's going to do it, because none of the markets care what I think. I can tell you that. None of them do. But that would be great. And if you're already in this, I don't see any reason to get out. Perhaps add if you come back and test that wave 3 high for another bounce to the upside. If you're waiting for an entry, it'd be hard to enter right now because it is overbought with the 10-day moving average. Let those two correct themselves and then look to go long. And my guess is that that 30 level is probably not the end of this. If we take a look at the DMI The ADX is just now about to cross above 25, which is the more conservative level. I like 20, as our subscribers know, but great separation in the directional indicators. Yeah, I think this is a great one, Vince. I think this goes higher. Just, man, it's just overbought right now. So I would have a little patience unless you're in it already. If you're in it already, like I said, just look to add to it if it pulls back to the downside. But great looking chart. What does risk on a trade mean? Is a question. Well, the risk is that you're wrong, right? That it goes the other way. You put capital into a trade and you're risking that capital. And if the trade goes against you, then it could be a movement against you. If you're asking about when we talk about risk on, risk off type of environments, that's kind of code words for being aggressive, being conservative. Risk on is when the market is trending higher and you're willing to take more risk because everything is moving in your favor. Risk off is when you're like, oh, we're overbought or things are extended or whatever, and we're likely to move to the other side. So you don't want to really take as much risk as you normally would. It doesn't necessarily mean you don't want to put any bullish trades on, but you're far more cautious than you would be in a full-on risk-on type of environment. And maybe you were talking about or referring to when I mentioned Bitcoin and moving to the upside. And Bitcoin is viewed as risk on because it's viewed as being riskier, right? People view cryptos as being a risky thing to be in. Why? Because they're volatile. That's what creates that risk environment, is the volatility, because they move a lot. But it's only risky if it goes against you, right? If it's going your way, you don't view that as being risky. But in the general terminology of the market, things that are more volatile tend to be viewed as being riskier because volatility can work for you or volatility can work against you. And if it works against you, it's not a good thing. Pankaj is asking about JP Morgan. So JPM, you would think that in this environment that they would do pretty well. And do I see a breakout? It looks like it just has. This is that consolidation that I was talking about where you break above resistance, like on the coal stock, HCC, that Vince asked about. This is what you'd like to see. Consolidate right here above that breakout. And yeah, as long as interest rates don't tank back down, that's a pretty nice break there above the previous three. The ADX, okay, now here's an area where we can talk about that. See, the ADX is broken above 20 and is between the two directional indicators, but it hasn't broken above 25 yet. So for me, looking at this, the fact that we're in a wave 3, I think that that's a go because the ADX is between the two directional indicators. There's good separation. It's broken above 20. I don't need the ADX to break above 25 because we're looking at Elliott and other indicators, et cetera. So I think this looks really good. And you can see that even with the market moving to the downside, it really hasn't hurt this stock too much. And the key is interest rates, right? This is just a general thing. This is a good educational thing for those of you viewing on YouTube or have been with us before in TradeFinder, et cetera. The general thing is interest rates and financials. When interest rates go up, financials do better. And it's because of that spread that I explained to you earlier. That's it. That's why. It's nothing fancier than that. Financials make money off the spread. They need the spread to widen. When it condenses, it hurts their profits, period. Now, JP Morgan has a trading desk, so there's other avenues of income. Some other financials do as well. Goldman Sachs comes to mind. But in general terms, these big financials, they want interest rates to go to the upside. So even if interest rates go up a lot and all the technology stocks crash, financials can still do well. And I do think that looks good for continuing to move to the upside. So Brian is saying that Jim Ruger said China's financial bus is falling apart, more like the wheel. Yeah, well, China's done it to themselves, haven't they? Really, that I don't say China's getting what they wanted. I don't know why they would be upset. They're attacking all of their companies that are doing well. So that's what they want. MTDR. So we'll take a look at that. MTDR. Man, resources, yeah, all these stocks are in the right sector, but that's a bit vertical, isn't it? Gunther, you know how I feel about vertical movements, but so we got a doji today. Something's going to happen tomorrow. This is another one where you'd have an ideal scenario. If that came back down, tested that wave 5 high and consolidated with the 10-day moving average, that's a full-on go, likely to move back to the upside. Let's see what the DMI is showing. It's getting overextended, not quite there yet. So I think that wave 5 target gets hit. With the doji, it could happen tomorrow. Remember, things can stay overbought, but for only short periods of time. But it would be great if it came back down, tested that 10-day moving average, and then you have a really nice movement to the. That's another good one. You guys are pulling out some good looking charts to look at, but same thing, just a touch overbought. Right now, I'd be a little patient, give it a day or two. Let's see if all of this stuff calms down a bit. It doesn't have to, right? We know inflation is a problem. We know that the Federal Reserve is burying their heads in the sand when it comes to it. We know all those things, but yet these charts are extended. And so maybe we missed some moves. And I missed another entry on UNG. We've been in it twice, and we had a one-day correction again. Last time we caught the one-day correction. Felt like maybe we correct a little more and it took off, but we'll get another entry in it. I fully believe that. So, you know, we're not done with natural gas by any way, shape. We're in early October. So I just don't think, I mean, those stocks usually peak out towards the end of November. So be seeing some more trades on UNG. I'm quite certain of that. But they're just overbought. It's really hard to chase them right now. So same thing here, but that's a good looking chart. PXCL. I'm not familiar. Is that the right symbol? PXD. My bad. Sorry about that. PXD. Still don't see a symbol or exchange on that. Is that on the ASX? We don't have that symbol, PXD. Gunther, if you can help me on that, perhaps maybe we can find something else. BTU from David. Yeah, that's Peabody has a lot to do with natural gas, right? I mean, and they almost went out of business. Look at where the stock was. I mean, they almost went out of business. And now you're looking and you see, look at that wave 4 correction right at 38.2, and it went sideways and it's starting to move to the upside. You're right. That's another, man, you guys are on it tonight. For those of you that this is your first TradeFinder, this is the fun part, right? You guys show things and everybody gets ideas. So it's more than just listening to me talk. You're probably sick of listening to me talk because we've been doing so much education lately. But look at what you're gaining from all your other viewers and all these ideas that you're getting as far as trading ideas. That's the beauty of TradeFinder. You guys have come up with some great ones tonight, especially, again, a little overbought. Hard to say go long now. And then you have some resistance right here at the previous 3. I can't see it breaking that 3 being overbought with this gap up. It seems like it wants to consolidate a bit here, but the DMI is looking like it's setting up for another run. And I would think that wave 5 target very likely gets hit in the future. But right now it's a touch overbought. So, you know, you can see this, right? Everything energy related is all being very, very similar. Alibaba, we'll look at that Thursday night. I just think that Alibaba's done little bounce today, but I just think that 100 at least is in the cards, maybe lower on that one. They have no chance with the government attacking them that way. Since Bitcoin stocks don't always completely follow Bitcoin, which Bitcoin stocks do you like? Well, I wish we had an ETF like Canada does on their Toronto Stock Exchange. I'm waiting for there are some funds that trade Bitcoin, but they're not optionable. So we don't really pay much attention to them. But in Canada, they do have optionable ETFs. that trade Bitcoin, and they're ahead of us along those lines. So I would like to see that come down. I can tell you some of my favorite crypto stocks, but I think that would border on individual investment advice. And so I really have to be careful there. So I apologize. I think that's kind of crossing the line. So when somebody asks me what it's different for me to look at a chart that you're asking about and giving an opinion on it, versus me telling you a stock, as a recommendation to buy. It's just different. So sorry about that. When the ETFs come out, then that gives us a whole different ball game to look at. OZK, banking stock. It's hanging in there, right? And this is one, again, that as long as interest rates stay okay, this probably holds this level and moves back to the upside. You can see it got just a little bit overbought, just enough to where it couldn't put any distance between 45 and where it was currently trading. If interest rates stay up and they turn and go back, which I think they will, but it just depends on what they actually do. Again, my opinion doesn't matter. I think this could be an earlier one, because it's just ready to break out. It's had resistance at 44 for so long. If it breaks above that, it could take off and really run. But it's got to get above 44 with a follow-through day. Remember that if you haven't been viewing this before, when you break a major point of resistance, break out of a triangle, etc., we preach this to our subscribers. You have to have a second day, a follow-through or confirmation day. One day doesn't mean anything. There are a lot of head fakes that occur in the market, a lot of them. You have to have the follow-through. That's really important. So we'll look at SJM. And then we'll get a couple more and then we'll wrap things up. Already gone over time. JM Smucker, it's one of those that typically does okay when the market isn't, people like their jelly, right? Or peanut butter or whatever. They're still going to eat those things. So it's held in there pretty well considering what's going on in the market. I think if the market were to rebound and move back to the upside, then I think it breaks the 120 and goes down to that wave 5 target there. But if the market stays squarely the way it is, and we go down and hit that extension on the zigzag and the SPY, perhaps we bounce up to the wave 4 there. But this is a tough one because there's some resistance right here in this area around 125, and then there's a ton of resistance at 130. There's just a lot for this stock to get through. I just think there's better avenues to put your risk capital than this. NEO, we'll look at that one on, I'll go ahead and look at it. We're going to look at that Thursday night. 35 was a big level that broke. So then you're looking to see, does it test it, which I think is what's going on now. So this is another China stock. And without China government's intervention and all the things they're doing, I think this would be totally different. With oil going up, Tesla's going to the upside, right? You would think this is a great time, but they've got all this other stuff to deal with. And they're talking about, delisting China stocks because of everything that's occurring. And it's just tough to be bullish on this. So it broke it. No follow through day today, but it may just be testing 35. But you want to see a break of that 35 with a follow through day. And if you do, then I think we go back down somewhere in this area. 2015, somewhere in there is where NEO is likely to go. But remember, you have to have, we didn't get the follow through day today. I was watching it myself, but breaking below 35 with a follow through or confirmation day, then I think there's a lot more downside to go there. Tesla, we talked about that. We're going to go into that one. SI, we'll look at that. Not as familiar with them, but pretty nice upside today there. That's got to be overbought though, which it is. You can see that significant break above 120, long time resistance there. So that's kind of getting in the realm of the IWM, right? Just tight trading range. This is what happens. This is why we look for triangles, right? Because they break out when you go through consolidation, and it didn't even flinch at 140, which is a little surprising. You know, it looked like maybe it held yesterday, but right back to the upside today. We got a little bit more consolidation here at 160. And now that you're overbought, perhaps it takes a break here. But if this is doing well in a higher interest rate environment, once it consolidates or corrects this, it's overbought right now. So warning, warning. But if it consolidates that under 160, lets the 10-day moving average catch up. And if it breaks above 160, then I think it easily runs to 200. I could clearly see that occurring. Paul's talking about, yeah, the chips, the same thing that I was talking about there, where you have super expensive cars relying on really cheap chips. And there is a speculation that some of the chip makers, they don't want to, use their machinery to make old school chips, et cetera. They're trying to get automakers to move into newer technology, but automakers don't want to do that because then that increases the prices because they have to retool all their machinery and all their electronics, et cetera, for the newer chips. So they don't want to do it because they want to keep the price of the cars down. Well, the chip manufacturers don't want to continue to make these old cheap chips that they don't make as much money on. It is a catch-22. Totally agree with you there. So David's saying on JPM, look at the taking money flow. That's another one of our signals that we look at. It's been negative, but it's moving back to the upside. And remember that what you look for is divergence or confirmation with the CMF. And just because they're red bars, that doesn't necessarily mean that it's totally negative. It broke above here, and we are getting a set of higher lows there, if you will. And I just think that that's gonna all change, but it depends on interest rates. Remember, we go back to interest rates. Interest rates have to stay up and move higher for the stock itself to move higher. If they do, I think that money flow is going to totally change and move with it. But if interest rates come back down, then JP Morgan probably doesn't break above 170 and it comes back down. But if that breaks above 170 and runs, I think you're going to see a totally different CMF out of that. PXD, again, Pioneer Resources. I don't know why. Oh, did I type it in wrong before? Maybe it was my fault. So looking at this, same thing. These resource stocks that you guys have been looking at, Doji today, overbought. Could already tell that from the vertical movement. So it's overbought with the 10-day moving average. Again, we have the highs right in through here. So same thing, an ideal scenario, backs off, fills that gap, lets the 10-day moving average catch up. Perfect. So move back down to 175, let the 10-day moving average catch up, fill that gap, probably run into 200. But it could go to 200 tomorrow too. So talking about the ideal setups that Doji and everything overbought in energy, just all this stuff is all tying together. Perhaps they rest. It would be a good time for them to rest a little bit. We'll look at this one, Yang, which is a China ETF, 3 times. So is this bearish? I'm not really familiar with this one. It makes sense. So, these multiple ones, remember now, these are based on, they have futures in them for leverage. That's how they get the 3 times. So you get double the time decay. So you have time decay on options and you have time decay on the futures in there. So you got to be right in a very short period of time to trade these things. And then when you take a look at this, you've got a nice triangle pattern here, a really good ascending triangle. If it breaks out of that triangle, then I think it runs higher. You got to discount the Elliott Wave pattern, the Wave 5 pattern, because the Wave 4 corrected 77%. So be careful there. So I'm going to turn the EDOs. You just got a triangle. So you have to watch the triangle. Where does it break out from here? If it breaks higher, then it's going to run like crazy because it's going to break out of that triangle. But that resistance could hold at 21. So hopefully it doesn't take long to break because, again, double the time decay. something's going to happen with that one. I can't tell you which way it's going to go. The Elliott Wave pattern is disqualified. You're in a really nice ascending triangle. It can break either direction, but it's going to break one way or the other. Thanks, everybody. Sorry about running long. We appreciate your time. For those of you that first time watching, thanks for viewing. Time is the most valuable thing we all have, and we really appreciate y'all spending some of it with us. Hopefully you found that informative and educational. Look forward to talking to you again next